Canada just announced its largest non pandemic deficit in history, $78.3 billion. At the same time, the government is cutting 40,000 public sector jobs and promising to spend 280 billion over 5 years. Sounds contradictory, doesn't it? It's all part of the new Canada Strong budget that's reshaping how the federal government spends your tax dollars. Let me break it down for you. Welcome back to KP Money Talks, and today we're diving into Canada's 2026 federal budget, the first under Prime Minister Mark Carney, and the first delivered in fall instead of spring. This budget is massive, controversial, and will impact every Canadian. Whether you're paying attention or not, these changes affect your taxes, your services, and your future. Now let's hit that subscribe button if you're interested in more Canadian finance information. The 2026 budget titled Canada Strong commits $280 billion in spending over the next 5 years. This is being called a generational investment meant to prepare Canada for global uncertainty and US trade transitions. The projected deficit for 2026 is $78.3 billion, the largest outside of the pandemic years. But the government says this will gradually decrease to 56.6 billion by 2029 to 2030. Here's their strategy. Separate operational spending from capital investments. Think of it like a household budget where you distinguish between groceries and buying a house. Day-to-day operations should balance with revenue by 2028-2029, while long-term investments get funded separately. Now, the major money allocations include 110 billion for productivity and competitiveness over 5 years, 54 billion for core infrastructure like water, wastewater, and transit, 37 billion dollars for health and innovation, 30 billion dollars for defense and security, 25 billion dollars for housing, and 19 billion dollars for indigenous and municipal infrastructure. The government argues these are investments that will pay dividends, not just spending. But the critics argue that it's still debt that the future generations will have to pay. Here's where the things get a little controversial. The budget plans to cut 40,000 public sector jobs, about 10% of the federal workforce, and reduce ministry budgets by up to 15%. Why the cuts? The government says this will save $44 billion over 5 years and make government more efficient. The money saved will be redirected towards nation building projects and infrastructure. Prime Minister Carney, who is described as physically conservative, is reserving some previous spending increases and trying to slim down government operations. Now, what this means is that if you interact with federal services, passport application, tax inquiries, immigration processing, you might see longer wait times or fewer staff available to help. The government argues AI and automation will make services more efficient, but critics worry that services will have a decline in quality. Canada is ramping up defense spending significantly, aiming to reach NATO's 2% of GDP target by 2026, with plans to hit 5% by 2035. The budget allocates 30 billion for defense and security over 5 years. This is a direct response to pressure from NATO allies and growing global instability. Now, what's being funded? New Defense Investment Agency, Defense Industrial Strategy, which is coming soon, military equipment and personnel, and cybersecurity and national security infrastructure. For context, Canada has historically underspent on defense compared to other NATO countries. This budget signals a major shift towards taking defense more seriously. The centerpiece of this budget is infrastructure investment through the new Build Communities Strong Fund, $51 billion over 10 years. Starting in 2026-2027, this fund will invest in roads and highways, water and wastewater systems, transit infrastructure, healthcare facilities, and housing constructions. A new federal agency called Build Canada Homes will spend $7.3 billion over 5 years to boost housing supply. The goal is to address Canada's housing affordability crisis by directly funding construction. Additionally, $5 billion is allocated specifically for transportation and distribution infrastructure, ports, freight railways, airports, and highways, to strengthen supply chains and economic competitiveness. The trade off is that some housing programs are being wound down, including the Canada Secondary Suite Loan Program. The government is focusing on programs that directly increase housing supply rather than general affordability measures. The budget includes dramatic changes to immigration targets, one of the most significant policy shifts. The targets for temporary residents dropped from 673,650 in 2025 to just 385,000 in 2026, a reduction of nearly 43%. The government aims to bring temporary residents down to 5% of the population by 2026 from the current 7.3. The permanent immigration remains relatively steady at around 380,000 annually compared to 395,000 in 2025. The budget creates a one-year program to fast-track 33,000 temporary workers to permanent residency. Additionally, the government plans to recognize more foreign vocational qualifications and attract international researchers. This is a major shift aimed at addressing concerns about housing pressure and labor markets impact from high temporary immigration. Several tax measures are changing or being eliminated entirely. Taxes being eliminated are as following: underutilized housing tax, luxury tax, and consumer carbon tax. A new temporary personal support worker tax credit provides 5% of eligible earnings up to $1,100 annually. This is for healthcare workers in hospitals and care facilities. This applies for tax year 2026 to 2030. Starting with the year 2026, the CRA will automatically file taxes for approximately 5.5 million low income Canadians who don't currently file. This ensures they receive benefits like the Canada Child Benefit and GST HST credit. This is huge for people who miss out on thousands in benefits simply because they didn't file returns. The bottom line is that Canada's 2026 budget is massive, ambitious, and controversial. We're seeing $280 billion in spending and a $78 billion deficit. $40,000 public sector jobs are being cut, major defense increases, infrastructure investments, immigration reductions, and tax eliminations. Whether you think this is a smart fiscal policy or reckless spending depends on your perspective. But either way, it will impact every Canadian. Your action item for this video is that you need to pay attention to how these changes affect services you use and the benefit you receive. Stay informed. If this breakdown helped you, please hit that like button and subscribe for more Canadian policy analysis. Comment below whether you support or oppose this budget. I read every comment. Thank you for watching, and I'll see you in the next one.